Senior Derivatives Manager at Charles Schwab. Get us going here. Nice bounce for the NASDAQ, but short of last week's highs. So should we make a big deal out of it until we cross that threshold?
Well, I'll throw a date out there for you, Oliver.
Okay.
1/13/22.
Hey, you got a new shot, Nick. They let you out of the basement.
That's right. That's right. Here we are.
Okay, sorry for interrupting.
Light and everything. No more. I'm not just living off the bucket of fish heads in the basement anymore. This is good. January 13th is the trivia question. What happened on January 13th? That is the last day the VIX was this low. Think about that, right? Since basically the beginning of the year,
it's been a minute.
Has not hit a low this low. 1851 is the close today. So I'm going to say, cautiously optimistic, whatever caveats you want to throw in there. The VIX is telling us this is a bit of a trend, right? Yes, Thursday, Friday of last week were rough days, but look at how the VIX and the markets reacted today. We saw a really strong, percentage-wise bounce in a lot of names to start the week, especially tech and growth kind of hitting back from what happened last week. We saw that sort of happening 10 days ago, right? A little bit of a rally. This is getting better. But then really made you question that end of week last week. But I think the difference is here, the VIX really responded today. And similarly, the VXN did as well, right? So seeing the vol really come out of this on a big rally back, I think is a really positive sign for the bulls, and just telling us again a little bit of stability going into the week, and kind of some of those unknowns becoming known, and some of the geopolitical stuff just settling a touch, makes that VIX hit a low that we haven't really seen since the start of since the start of the war, and really since the start of the year.
So that's a good context. I really like the fact there that VIX is down, even though we haven't made back some of the ground just within the last couple days. That's a really important point, because as VIX is going down, it signals something, Kevin, here possibly bigger than just some of the intraday moves, right? I mean, this is now a months-long perspective that tells us there is maybe cooler heads prevailing, perhaps?
Definitely. And you know what, Oliver, we always got to keep in mind, the VIX can move on a dime as well, right? So we could see what's happening right now, but it could also change tomorrow based on some news. But right now, if you're looking at the VIX, and also the VIX futures is right now in contango, which is really good to see. We were in backwardation for a considerable amount of time, almost about 3 weeks there, which is why we saw a lot of that volatility right now. So seeing the VIX at this 18 level, if you could stay at an 18 level, I think that would be pretty good moving forward here for the next couple of weeks, if you will. But we'll see if it also moves up a little bit as the Fed meeting minutes come out. I think that probably will be the speed bump this week that everybody's going to be looking for. But overall, when we're seeing the names that are actually doing really good today, IT, communication services, and consumer discretionary, that's what got us to all-time highs in the S&P 500, also in the NASDAQ as well. And I think that's going to be the thing that actually carries us through. One thing I just want to keep in mind, Oliver, I think the key area, the key sector is going to be the semiconductors. I don't believe that we are going to be able to hit all-time highs without them. And we saw a lot of volatility last week in the semis, a little bit of a sell-off. We are seeing some pretty good gains in the stocks today. But I think that's going to be a key catalyst for the overall broader market to get to all-time highs here, if we're going to try to attempt that in the next couple of weeks.
Okay. So if we're going to do this, if bulls are really going to take charge, then I guess we know how it's going to work. I mean, old times are back. Old habits die hard. That it's Tesla, Apple, and the others. I mean, there is still a big cohort of growth companies off the highs. Mark Faber pointed out earlier in the show that there could be strength in Apple, there could be strength in the big caps, but maybe it's not as wide a participation. That's an interesting market to think about, because generally in the past, Nick, whenever we had breakouts for Apple, the whole cloud group followed, the whole chip group followed, but perhaps it might not be like that this time. Maybe Tesla breaks out, but NIO still struggles down 25% as another example.
Well, the supply chain concerns, around startups in particular, and startups that are requiring a lot of chips and heavy manufacturing, I think is an anomaly. It's something we might almost have to kind of vacuum seal off from the rest of the market, because think about trying to start a company that's going to produce cars in this environment, right, versus the environment that Tesla had, right. it was free money, right? It was sort of easy hiring versus an impossible job market right now. And then in terms of hiring and a rising interest rate environment where you can't just go debt heavy and end up in a situation where you're never going to pay anything to hold that. So it's a much more difficult hill to climb for, I think, startups, particularly those in the manufacturing space right now, than it was when Tesla got started. And they have such a big head start, and obviously Elon's driving markets today in terms of lots of things, right? So not only do you not have him at the head of your company if you're Neo or some of the others that are out there, but Rivian, and you also have this incredibly challenging manufacturing time of getting workers, of getting chips, of getting all this stuff into the one place to build your thing. So I think that's going to be, I think, a divergence similar to maybe what we saw in the retail space 5-6 years ago, where those that become sort of the mega cap retailers, the Targets, the Walmarts, the Amazons, really diverge from kind of the monoline retailers like the Kohl's, Nordstrom, right, where you haven't seen that strong performance because they just don't have all of that stuff in house. They don't have the logistics. They don't have that kind of ability. So I'm likening it a little bit to what we saw in retail in the electric car space, sure, just because I think it's very difficult to get started right now and make sure your supply chain's all in house.
Well, all it takes is for a sector to fall out of favor, and then suddenly the prices of the stocks can get punished pretty hard, and people get choosy. And it does seem like over the last year, these high growth future themes have fallen out of favor. So, hey, I'm with you there. The catch right now is there's not a lot of news flow this week. I mean, who knows what's going to be in store with VIX back down to Jan levels. Maybe we will be more reactive to smaller headlines. Obviously, it's hard to top some of the stuff we were getting there for the month of February and March. Inflation running crazy, massive invasion of a huge European country, COVID cases surging in China. I mean, I guess it makes sense that it's hard to stay elevated at those VIX levels. But Kevin, we've got very little data this week. I mean, Kashkari's going to talk, but we already know that where he stands. Uber Dove gone a little bit hawkish. There's not a lot of big earnings either. So maybe a vacuum is good for bulls, or is a vacuum good for bears? I don't know where, but I know it's kind of a vacuum here these next few days.
Oliver, I think it's always great to be able to take a break sometimes.
Yeah.
I think that's what this market needs. We had a lot of news that came out in the last month and a half, and that just grew the anxiety for traders, not only bulls and also bears as well. So there's a lot that the market saw. So having a little bit of a calm week, if you will, I don't think is a bad thing. And I think that does provide a little bit of a catalyst for the bulls. But I think we're also getting geared up for earnings season. We're going to have the financials reporting here in a couple of weeks. We're going to see if there's going to be any type of revisions coming. And I think, Oliver, out of all of the other items that we talk about, geopolitical, what have you, supply chains, I think the big catalyst for a downside move would be some pretty significant revisions. And right now, the market's not really pricing that in. But I'm just a realist. If I'm looking from a commodity standpoint, the prices have just gone through the roof, and that's going to have a direct impact on not only the top line but also the bottom line. And even if you're looking at grains and even staple goods, if you will, that's going to have an impact on those consumer staple companies. I would not be surprised if we start seeing a couple of revisions coming down. I think that could actually impact the market to the downside. If we do not see that for whatever reason, because the consumer is just strong and they're ready to buy no matter what, I think that's a bullish trend that the market could rally on.
Yeah. Any sign that consumer is not as weak as some of the recent sentiment surveys have shown? I'm with you. That's a big potential concern that could be lifted if we get some kind of surprise like that, because lately so many sentiment levels have just been in the dumps. That's where last week's inflation compared to some of the price action since gets kind of interesting, because last week's inflation hit right on line with expectations. But then we did get the prices paid for ISM that was much higher than expectations. Crude oil continues to cruise higher this morning, and that's despite some charts circulating on the internet over the weekend about trucking prices peaking out. So this idea that maybe inflation will slow because of the wrong reasons, slowing consumer sentiment, slowing demand, that's kind of where the bears, I feel, still have some sway, Nick. If it's possible to slow inflation, it might be coming from the weakness of demand ebbing off, and that's
right.
not the right way we want to slow inflation. So if there's any sign of that, either in consumer sentiment or economic data, then that's probably an argument for the bears.
Absolutely right. And you don't want demand to be dampened down by people's inability to afford stuff, right? That's the definition of a slowing economy, and that's bad, right? You don't want oil to be down. Yes, it ended up rallying and being up on the day because China's locking down. Like, you don't want to see that sort of trade-off, because that's just, you're sort of cutting off your nose to spite your face type thing, right? It's not a good, healthy way to bring down prices, and that goes across the board with chips, energy, food. None of those sort of demand-driven constraints are ever a good long-term thing for the economy. So you have to take all that sort of with a grain of salt, I think. Look at some of the upgrades and downgrades today. We saw J.P. Morgan downgraded by Jefferies from buy to hold in an environment where the Fed has telegraphed, multiple rate hikes, right? Multiple, double rate hikes, if you will, as well, right? So 6-8 rate hikes this year. The biggest bank in the world is being downgraded. Why is that? Well, the biggest reason cited was cost. So if it's pervasive in commodities and it's pervasive in electronics, and now we're seeing companies that are covering financial institutions say costs are going up, right? That probably is labor cost and technology costs, right? Those are the kind of two biggest drivers there. So even though revenues are going to be up for banks and because of this rising rate environment, like, it's very transparent. You can figure out how that affects the balance sheet. They're saying, hey, this isn't as bullish as it sort of seems on the surface because costs are going up across the board. That's pretty much every sector you can think of, right? It is going to have those input costs up. And if that's happening and those wages aren't keeping pace, right, because employees aren't getting sort of that boost, how does that translate? It translates into slowing demand. People can't afford to buy as much stuff. Even if you're spending, your dollar doesn't go as far, right? So that's a tough cycle.
Yeah, we need people to hire, and with prices, with wages that are going to make sense. Or we see the Amazon story show up elsewhere too, the Staten Island labor win that they had. So maybe the unionization is one way through this. We're going to get more headlines like that, Kevin? What do you think? Should we be poised for labor to play a bigger role here in 2022?
Definitely. I think you're going to see that not only in 2022, but we've been seeing this for the last 2 years, not only just in the unionized, but also the non-unions as well. There's a lot of companies that have been making adjustments in order to keep and retain talent. So I think that's going to be key. For one thing that I just wanted to call out too, I think it's also consumer behavior. I think consumer behavior has changed since COVID, and I'm just a firm believer of that. I think the savings rate is still pretty good. I think the windfall that a lot of individuals and the consumers had during COVID to be able to stack some money up for a rainy day, I don't think they're going to go out and just immediately spend that and be right back in the situation we were pre-COVID. I think you're going to be able to see a little bit more of a frugal consumer moving forward, and that also can impact consumer demand overall. Even if demand falls off, right? If demand is going to fall off, it's not just falling off potentially because prices are higher. It might just fall off because the consumer just doesn't want to leverage some of the capital that they have saved up as well.
That's right, because it's dwindling. It's getting back down to pre-COVID levels here. All right, well, market is off to the races here. Macro headwinds still ahead of us, but not a lot of obvious updates on the calendar. So we'll see if the bearish imagination runs wild this week or if bulls hold the recent momentum. Thank you, guys. Great conversation. An elongated panel here. Nick Theodorakis and Kevin Green joining us. Unfortunately, we will not be talking Bitcoin with Anthony Scaramucci today. Hopefully soon. When we get back, let's talk some overlooked stocks. My namesake, Ken Rose, is checking me out. Ollie, but I do mine with an E. I also don't really go by that anymore. So I guess we'll just talk about the stock.
Let's walk through charts, one of the most commonly used features on Thinkorswim. Start by going to the Charts tab and entering a ticker symbol. Select time frame to adjust time intervals or to favorite a time frame. Select style to change the appearance of the chart. You can add drawings by selecting Drawings, Drawing Tools, and then Type of Drawing. For symbol comparisons, select Studies. This also gives you access to hundreds of pre-built studies, including a number of classic patterns. The grid icon lets you view multiple charts at once. You can even initiate a trade from the Charts tab. Just right-click anywhere on the chart and select either buy or sell. For more demos on how to think or swim, head to the Education Center on tdameritrade.com.
It's a 13-hour flight. That's not a weekend trip.
15 minutes to wait for it.
I gotta take off.
Now, you downloaded the TD Ameritrade mobile app so you can quickly check the markets?
Yeah, actually, I'm taking one last look at my dashboard before we board.
Excellent. And you have Thinkorswim mobile?
So I can finish analyzing the risk on this position?
You two are all set. Have a great flight.
Hey, thanks.
We'll see ya. Ah, they're getting so smart.
Choose the app that fits your investing style.
When traders tell us how to make Thinkorswim even better, we listen. Because platforms this innovative aren't just made for traders, they're made by them. Thinkorswim Trading from TD Ameritrade.
Okay, time for some overlooked stocks. Ken Rose is manning the helm in George's absence, joining us from Salt Lake. He's got Ollie's bargain outlet on the mind. Okay, so don't complain to me if you see any higher prices at this place. I don't run it. I know it's confusing. So despite the name, let's get into it, Ken. Shares are up 16% today because Wells Fargo analyst says to buy it. That can't be it.
Right, Oliver. You know, if you look at the underlying fundamental performance of this company, it does look rather dismal. If you look at the last 4 quarters, they only had earnings beats two out of those last 4 quarters. Their gross profit margin was the lowest in history for their most recently completed fiscal year, falling in at about 36%. However, that is as low as that is for them individually. That's still relatively high in relationship to their competitors. Their price to book is currently at about 2.36 compared to an industry average of about 6.4. So the price to book, this in looking at some of these fundamentals, you know, the fundamental performance hasn't been great, but it's pushed the price down to a point where it could represent a potential value play. One of the key problems, though, in relationship to their fiscal 2021 performance is that their revenues were down 3%. Their operating expenses were up by 6%, which resulted in a EBITDA falling by about 23%. So not doing particularly well at this particular point in time. Their PE ratio is currently sitting at about a 21 in comparison to the average PE ratio on the S&P 500 at 25. Their price is down 49% from where it was at the 52-week high, and that includes today's move here, Oliver. So fundamentally not so great. Technically, a very nice pull through here today. I think basically what analysts are looking at here is the expectation that part of the problem that Ollie has been dealing with is related to supply chain issues, and possibly those supply chain issues going away over a period of time that could put them in a better place and in a better place to return to their prior performance, Oliver.
Well, I will say that it's suspiciously underperforming other retail discounters, down at the March 2020 COVID lows. Not a lot of stocks are down there. Dollar General's at the highs. Five Below has been pulling back, but still well above where it was pre-COVID. So it's like the market just thinks that company's done nothing right compared to some of the other ones here. I mean, kind of most similar to like maybe not a Five Below necessarily, but it's in the same ballpark, right? They've got different types of products. There's a little apparel, but basic goods essentially, and consumer staples. So, I mean, the chart just looks so much worse. But does today's rally change any of the recent technical action, Ken?
Well, Oliver, I think if you look at the way they operate, basically what they do is they go out and they purchase overproduced, overstocked, and closed out merchandise. And there is some justification to feel like the supply chain issues could be creating some difficulty with them being able to do that. And when those supply chain issues are evened out, perhaps there will be more overproduced, more overstocked, and more closeout type of merchandise that they can acquire and turn around and sell and move up their margins with regards to that particular way. So I think that's probably I think that's going to be a big part of it, is their ability to actually acquire stuff that they can sell and acquire it at a price where they can turn around and sell and return to some of their previous margins, Oliver.
Okay. All right. Nice. Good find here. Big winner on the day. Ken, you got one more for us, though. Perion Network. We just talked with the CEO last week, maybe the week before. Sometimes it blends together. I think it was last week. The Israeli-based digital advertising business. How come it showed up on your radar today?
Yes, well, so this stock is doing much better from a fundamental standpoint. If you look at the underlying fundamentals over the last 8 quarters, they beat estimates on each of the last 8 quarters. Their EBITDA for the fiscal year 2021 is up 108% over their EBITDA for 2019. They're currently selling at a price multiple of 25, compared to the S&P 500 sitting also at about 25. If you look at their revenue growth year over year, if you look at the most recent quarter and compare it to the same quarter period a year ago, the revenue growth is sitting at about 33.59%. If you take a look at that same quarter going back to 2019, the revenue growth was only sitting at 8.7%. So they are growing with regards to revenue and also with regards to their profit and also with regards to profit margin. So this company, if you look at the underlying fundamentals, they are intriguing. And they do represent a justification with regards to some nice strong price movement. I believe the price movement today was just based on the company coming out and talking about what their forecasts are going forward. Apparently, analysts and investors are liking what they hear there, and so they do have this nice strong move to the upside here. This particular move that we're seeing here is more justified based on the underlying fundamentals than what we were looking at on the previous stock development.
Got it. Hey, you will release a revenue that's ahead of the expectations, preliminary. Market's going to love it. So 16%, March 22nd, we interviewed Doron Gerstel from Israel, the CEO of Perion Network. So for those who want more, and on top of Ken's good research and technical analysis here, go check it out on the TD Ameritrade Network website. Thank you, Ken Rose. Nice way to close out the show here with some overlooked stocks. Your first trade is coming up next. I'll see you tomorrow.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. The Platform Demo Webcast Series is designed to help you broaden your knowledge of tools and resources available from TD Ameritrade. You'll learn tips and tricks to help navigate TDAmeritrade.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
I'm searching for info on options trading, and look, it feels like I'm just wasting time.
That's why TD Ameritrade designed a first-of-its-kind personalized education center. Their award-winning content is tailored to fit your investing goals and interests, and it learns with you. So as you become smarter, so do its recommendations.
So it's like my streaming service.
Well, except now you're binge learning.
See how you can become a smarter investor with a personalized education from TD Ameritrade. Visit tdameritrade.com/learn.
TD TD Ameritrade Network has arrived on the floor of the New York Stock Exchange new location with access to the biggest newsmakers in Wall Street, bringing you in-depth market coverage and real-time trade ideas. Do not miss our exclusive interviews with CEOs, bell ringers, traders, and stock pickers, keeping you informed as you navigate your investments. Don't miss Trading 360 at 11 a.m. Eastern and the watch list at 2 p.m. Eastern, live from the New York Stock Exchange, only on the TD Ameritrade Network.
We empower those who act. Those who see the correlation between things above and things below the surface. Those who navigate risk by meeting every turn with a heightened awareness of what's possible. Constant assessment. Determine the best position. Catch the perfect wave. CME Group, where risk meets opportunity.
Trading has changed forever as a new generation of investors make their impact on markets.
It's more important than ever to navigate through the frenzy of meme stocks, IPOs, and the next wave of tech.
And that's where we come in, discussing strategies and example trades on trending names.
Take control of your financial future. Next Gen Investing, weekdays at 1 p.m. Eastern, only on the TD Ameritrade Network.
Welcome to Your First Trade. I'm Scott Connor, a 30-year veteran trader, and it is Monday, April 4th. Now, on our show, got a lot to cover. First, we'll kick things off with Ben Watson and look at an example option strategy based on Procter Gamble. That's symbol PG. They're a worldwide provider of household goods, but we'll break down the charts with the chart master and then put together an example trade. Then we're going to join John McNichol and talk about something very important to options traders, and that is the leveraging the ability to forward test an option strategy. We're going to go into the Thinkorswim platform to do that. You don't want to miss that. And then finally, I'll wrap up the action in the market today. A lot of big moves in a lot of big names. That's what we're going to break down in the last portion of the show. All right, well, let's kick it off at the top. And as I mentioned, we're starting off with an example trade option strategy based on Procter & Gamble. Now, let's bring in the chart master, Ben Watson, first, to get his take, or from a technical standpoint, of what he sees in the charts. Ben, thanks for joining us here again on Your First Trade. Procter & Gamble, a household name, I think, for a lot of people. If they don't recognize it, I can just think of a couple brand names, Head & Shoulders, Olay. I'm just going to, what else is out there? Gillette, Crest, right? Old Spice, Vicks, you name it. Tide. I mean, so many names that are used in households come from this company. So I thought we'd look at one of these big consumer staple type companies, Ben, just to kick the week off. They have earnings in a couple weeks, but we'll stay inside of the earnings announcement, Ben. But again, what's your take? Right. What do you see on the charts with this behemoth, if you will, in that space?
I'll tell you what, Scott, you mentioned a number of the products that they provide, and that's one of the reasons why oftentimes these stocks in this consumer staple space are referred to as defensive stocks, because they contain things that people need to buy, not just discretionary buys. And so you've seen that consistency in this uptrend really kind of play itself out over the course of this last year. It's been a strong uptrend. Now, most recently, in the last couple of months or so, we've seen a bit of a pullback back down to the support around the 142 mark, and then it rallies up again pretty strongly up off of that 142, runs into a little bit of a resistance area here right around the 155 mark. Coincidentally, that resistance comes in right about where that 50-period simple moving average is intersecting that horizontal resistance. We get a bit of a gap down into a hammer candle. That could be a possibility of a bounce higher here today. That would have to result perhaps in a breakout above that 155 if it can gain some traction and start to move higher. But at the same time, you've got that 50-period moving average that's been moving down a little bit that could act as a resistance area. If it keeps that resistance, we could see the price of this stock move back down maybe to that gap that is there right around that 147 level. And I'll tell you what, the RSI, that relative strength indicator, that's been uptrending as well, but it seems to, in the last few days, be kind of making a little bit of a symmetrical triangle where it's making lower highs and higher lows, so kind of squeezing into a little bit of a point here. So this area where the price is running into a resistance could be what sometimes is referred to as an inflection point or a turning point. It could be a resistance level and bring the price of the stock down. It could be a point where the price finally breaks through and uses as a kind of a leverage point and moves even higher from this level. But I think at this point, given the fact that we gapped down from that level and there's a little bit of downward pressure, we might see the price go sideways along this resistance level for a little bit, just from a technical analysis perspective. Scott, that seems to be what's happening with these candles is we're not getting a lot of upward drive. It seems to be pausing or stalling out right here around this resistance at about the 155 mark.
You know, Ben, it's interesting. You're just mentioning a candle, the last candle today. Again, there's been lots of intraday volatility. In other words, the stock today, I think, moved over $3 from the high to low. But if you're just looking sort of at the closing prices for last week, it's been pretty neutral, if you will, I would have to say. But does get some movement intraday, right? Now, here's my question, Ben.
Sure.
As we leave here, you mentioned kind of that resistance up at that 165 where it was at the beginning of the year. And then, of course, when the markets sort of hit the bottom, it got down to 145. So 165 high, 145 low. Now it's sitting right in the middle, 155. And you think maybe in the next 2 weeks that, you know, again, we're going to stay inside earnings, that this pattern may continue to play out, Ben?
Yeah, absolutely. You know, you look at the length of time that it's taken to get from that top to bottom, and that's been about a month and a half. And if we're thinking about how long it may take to get back up to the top, if it were to oscillate all the way back up to that 165 level, we're about a month into that. It may take another, another 2 or 3 weeks or so to oscillate higher. And so within that time frame that you've talked about, that certainly seems to be an appropriate length of time to see these oscillations happen from top to bottom and bottom to top in this price range that you described.
Got it. All right. Well, Ben, we're going to take that all into consideration, putting together an example option strategy, maybe just going out about 2 weeks, Ben. All right. Well, thanks for another great breakdown of the charts. We'll continue to do this throughout the week, Ben. We'll look for other names. And keep in mind, in about, I think 2 weeks, we're going to have the kickoff of the new earnings season. So we'll have our hands full then, Ben. All right. Thanks again. Look forward to seeing you back on your first trade. All right. Let's go to the trade tab on Thinkorswim. And I've got the symbol Procter Gamble in there right now. Again, let's start with time and price as we usually do. And here's the thing. We know earnings are coming up, and they're typically about the third week of April. So if we're looking at expiration dates and we want to stay inside, how do we know, just to get an idea, a general idea of which options will be reflecting the anticipated volatility? Well, it's pretty simple on this Thinkorswim platform. Go straight across to the right side, and let's look at the implied volatility of the expiration dates as they come here over the next few weeks. So the ones this Friday, 21. Next Friday, 21.66. And then when we get to the 22nd, look at, there's a jump to 24.5, and then the next week, 25. So again, when we see a jump like that, and then the following weeks, it drops back down to 23, 23. That's typically where a trader wants to focus attention, because when you see those higher implied volatility rates for expiration dates out in the future, that tells you that there's most likely something happening around there. Now, we know earnings are coming up, so that makes sense, but it could be a corporate action. There's lots of different things that could influence the implied volatility of different expiration dates. So a good takeaway there. So we're going to just tell you what, we'll go out just 10 trading days. So in other words, we're going to just go out 2 weeks. Now, this is a short period of time. Now, when a trader goes out a short period of time, the expectation of a big stock move is less and less than it is than perhaps 4 weeks or 8 weeks, of course, right? Or particularly going past earnings. So it'll be interesting to see what we can get in terms of a credit if we look at a range-bound strategy that might match the chart, or at least a trader who thinks that the stock may continue sort of in the pattern that it's in. So the stock at 154, if we go out 2 weeks, looks like the expected move is about $4.50 to $5 up or down. All right, so right now stock at 154, so that would take it up to 159. Well, here's the interesting thing. 154, let's go 3.5 to 4. That would take it about to about 157.5. And the reason I'm looking at that is because there are only $2.50 strikes going higher. All right, well, interesting. Now, if we go past 157, then we're all the way up to 160, and you can see that option only has a 7% chance of happening, and there's a very low amount of premium in that option. So I'll tell you what, let's look at selling the 157.5 call and buying the 160 call. And again, that's our only choice because these are, like I said, $2.50 wide spreads. So let's go kind of about 36 cents. Now let's go down the approximate same amount, 154. That would take it down to maybe something around the 150 level. Okay, there we go. The 150 level, and I'm going to hold down my control key and sell the 150 put. Now here's the question. Which put would the options trader consider buying? Right? So we sold a call spread above, and we want to sell a put spread below. Well, they're not $2.50 wide strikes. They're either $1 or $2 or $3 wide. So maybe we'll go $3 wide on this one and see if that makes much of a difference. So selling the 148, which I already did, I'm going to keep that. I'm sorry, the 150 put. Sorry. And if I went down to the 147, I'll buy that one. Again, hold down my control key, buy the 147. So this would be a $3 wide put spread and a $2.50 wide call spread. Are they exactly the same? No, they're slightly off, about $0.50. But again, it just depends on what strikes are available. So this will be sort of an unbalanced iron condor, if you will. Looks like we're getting about 65 cents credit on this one. I'm going to leave that at 65. That'll make our math easy. Now let's go ahead and hit confirm and send because we want to figure out what is the max loss and max gain on this. Well, $65 is the max profit. Of course, that's the credit received. And the max loss would be $235, right? So that's $3 minus the $65. Remember, the spread, the put spread is $3 wide. So we look at that max value of $3, which would be the max loss, minus the 65, that leaves $235. All right. The only other thing, I'm going to hit edit and change this from limit to a GTC and perhaps potentially give it a little bit longer or a longer chance to get filled, of course, assuming markets are open under normal circumstances. All right, there's our first example trade for the week. We'll keep an eye on it as the week progresses. Now stay with us because John McNichol is going to join us. We're going to talk about a dynamic feature on the Thinkorswim platform, and that is forward testing an option strategy. You don't want to miss this. We'll be back after this short break.
Many option traders tend to focus on price and direction, but implied volatility can also be a big factor in options trades. In the Options for Volatility course, we explore what implied volatility is and how it can potentially affect the price of an option. For example, let's say an option trader wants to take a bearish position on a stock, but isn't sure whether to buy a put or sell a call. Both strategies are bearish, but looking beyond direction to consider the impact of implied volatility could help the trader choose between them. We also introduce strategies designed to harness changes in implied volatility. For instance, time spreads like counters and diagonals are designed to benefit from increases in implied volatility. Iron condors, on the other hand, are designed to benefit from falling implied volatility. After learning about the strategies, you can take the final assessment to test your knowledge. Head to the Education tab on Thinkorswim for the full Options for Volatility course and a whole lot more.
Thinkorswim by TD Ameritrade is more than a trading platform. It's an entire trading experience. With innovation that lets you customize interfaces, charts, and orders to your style of trading. Personalized education to expand your perspective, and a dedicated trade desk of expert-level support that will push you to be even better and just might change how you trade forever. Because once you experience Thinkorswim by TD Ameritrade, there's no going back.
Opportunities can be hard to find, like catching lightning in a bottle. In uncertain times, it's tempting to retreat or simply wait and see. At CME Group, we empower those who act. We deliver tools to help manage risk and capture opportunities in every market climate, across every major asset class, to seize each possibility at precisely the right moment. CME Group, opportunity is everywhere.
Welcome back to Your First Trade. I'm Scott Connor. Now let's turn our attention back to the options world. And today we're going to explore a dynamic feature on the thinkorswim trading platform that can provide insights as to how an option strategy may perform in the future, and of course under different circumstances. Now you'll learn how this tool leverages the Greeks to stress test a strategy, and that helps a trader understand potential strategy performance. Now, joining me to help break down this tool on thinkorswim is Your First Trade contributor, John McNichol. John, thanks again for joining us on Your First Trade. We're talking about stress testing, so maybe let's kick it off there, John, for our viewers. Let's define what do we mean exactly by stress testing, John?
Right, Scott. So this is a method of subjecting an option strategy to the three principal variables that impact options pricing. Everything from an individual option to the most complex strategy can be tested. Some also refer to this process as forward testing, Scott.
Got it. So if you want to test a strategy, an option strategy, to see how it performs, you'll have to change the time parameters. You have to change, you mentioned price, what happens if the underlying stock moves, and of course, volatility. So why don't we, let's talk just a little bit more about these parameters and why they're important going into this stress testing, John.
Yeah, so these are the same parameters that we consider, Scott, on your first trade before choosing a strategy. They include time, price, and volatility. Each of these variables has a unique effect on an option strategy. Price or value can be measured by the Greeks.
Got it. All right, well, before we get into the actual tool itself, let's just touch briefly on the potential benefits to an options trader of being able to do something like this.
Yeah, so this is an important takeaway, Scott. The forward testing tool on the thinkorswim platform allows traders to create a scenario and then peer into the future to see how an option strategy would theoretically behave under different scenarios. You know, I do the same thing in the military. We look at possible outcomes. You know, what are the best outcomes? What are the worst outcomes? We can basically utilize these tools to see what those potential outcomes are.
Yeah, so the ability to change those different parameters and try the different scenarios, like you said, to see how it potentially plays out. Yeah, obviously that helps make those decisions as to, you know, what is the appropriate strategy, you know, what aligns with the trader's outlook. Well, let's start with the first one, like you just mentioned, and maybe we can put together an example here, John, for our viewers.
Yeah, absolutely, Scott. So let's use Facebook, FB, as our stock. And of course, as we always do, we'll go ahead and take a look at, you know, what are some of those scenarios are. So in the case of Facebook, we'll take a look at time and price. So let's say for time, we'll use 3 weeks. For price, we'll take a bullish stance and assume that Facebook's price will go up during that time, during that 3-week period. Now, let's say as an example, we were to choose an out-of-the-money call and subject it to the different scenarios and see how they may play out, Scott.
Okay, perfect. So we're going to use, and I'm like you, I keep calling it Facebook, but it's Meta platforms, John. I know it's hard, isn't it? Parent of Facebook, right, exactly. So no, we're all doing the same thing. We'll get used to it eventually. All right, well, let's get into, we'll use that one, a call going out about 3 weeks. Great. So before we go in and do it, let's start with the first parameter that we'll be testing for, and that's time, I believe, right?
Yeah, first variable being time. So the passage of time has an impact on the options price and can be measured by the Greek theta, T, theta, T, time. So for each day or 24-hour period, theta calculates the expected loss or erosion in an option's value. Holding the other parameters equal, Scott, we can forward test the cumulative effect of time on an option at any point between now and expiration.
Got it. Well, let's jump into the platform and show everybody how this works. I'm going to go, John, right to the trade tab on thinkorswim, and I have put in Facebook, Meta platform, sorry. And I'm going to go down and look at some options that expire in about 3 weeks. That's the 22nd of April. Now, that happens to be just before they announce earnings, but that's fine. And now, how do I use this tool on Thinkorswim? Well, what's very important is one of your columns has to show theo price. That stands for theoretical price, because the theoretical price is what's going to be changing when the options trader changes the different parameters or the different potential outcomes that will yield the different theo price. So that's why it's important. So you can't use this. Now, to the right of theo price, I hit that. If I click on this box, there's the parameters you just talked about. Time, that's changing the date.
Yep.
Price, changing the price of the stock. And of course, changing volatility. And those are your three different things you can do. Now, we're simply going to, let's start off with, the stock is currently 233, John. So I'm going to look at, how about this, the 237.5 call. That's a couple dollars higher than where it is now, so it's an out-of-the-money call. And right now, the fair value on that one is, let me just go ahead and hit reset. Now, this is a good starting point when you open up this tool. And because right now, the 237.5 is fair valued, its theo price is $5.47. So about $5.50. Now, John, what I'm going to do, I want to test time. I want to see what happens if the stock doesn't really move and volatility kind of stays where it is. What happens to this $5.50 option? You can see right here, if I just move out a week. So let's go from today's the 4th. I'm going to click on the 11th. So let's just go 5 trading days. Now, click on the 11. Now, let's go back to that 237.5 call and look what happened to the theoretical value. John, it went from $5.50 to $3.97. And again, we're just looking at time here. So, wow, that really brings forward, what happens when time marches on and everything else is the same. Now let's look at the second parameter. And of course, that's the actual price of the stock, John, right?
Yeah, that's right. So we factored in the time parameters. Now let's take a look at the second one, Scott, which is price. The change in price or direction of the underlying stock has an impact on an option's price and can be measured by the Greek delta. D delta, D direction. For each $1 move in the stock, delta calculates the expected gain or loss in an option's value. Holding the other parameters equal, we can forward test the effect of different directional moves in the stock between now and expiration.
Okay, John, so I stayed right on that option that we know now has a value of $3.97. And I'm going to say, okay, we'll go out a week, just like we did before. And I'm going to assume in this example that the stock goes up $3. That's a pretty good move, all right? So now I'm going to hit enter after I put in $3. And let's see what happens to that 237.5 call. Oh, take a look, John. Now it's $5.35. So that's only about 15 cents lower than it was before we touched anything, right? So going out a week and the stock rallying $3, John, the option's still kind of where it was, or maybe just even slightly lower. Let's look at the last one that we want to test for here. And of course, that's volatility, right?
Yeah, that's right, Scott. So changes in implied volatility have an impact on an option's price and can be measured by the Greek vega. V, vega, V, volatility. So for each 1% move in the implied volatility, vega calculates the expected gain or loss in an option's value with that volatility change. Holding the other parameters equal, we can forward test as well the effects of any changes in volatility between now and expiration.
Got it, John. I'm jumping back to the same screen again, and we'll leave the date 1 week ahead. We'll move the stock $3 higher. And if the stock is going higher, it wouldn't be unreasonable for a trader to maybe think that volatility might come down a little bit. So I'm going to lower the volatility just 1 percentage point, John. Now hit enter, and let's go down and see where that option ended up. $5.18. Okay. So even with a $3 rally, a week from now, and volatility dropping 1 point, well, you kind of see that the option really didn't do much with that particular scenario, John. All right, well, listen, we're going to have to wrap it up there. But again, this is a great tool, and I would obviously encourage all of our viewers to try this and try different scenarios. We just looked at one particular scenario. There's many, and it's a great takeaway on how an options price, call or put, whatever strike, how it might behave. John, thanks again. Always a pleasure having you here, and look forward to seeing you the rest of the week. All right, take care. All right, stay with us because I'm coming back to do a wrap of what the action was on Wall Street. Some big names were on the move. We'll wrap it all up in our next segment.
watchlist can help you keep track of securities you're interested in. To add a watchlist to the left sidebar, select the plus sign, then watchlist. When the default list appears, select the name box, then create watchlist. Enter a watchlist name. To begin adding securities, enter a ticker symbol in the symbol box, then select enter. Continue adding all the symbols you want in your watch list, then select Save. The existing list is replaced by the new one. You can also create watch lists from the Market Watch tab. After creating a watch list, you can add symbols to it from different locations across the platform. From the Charts tab, select the list icon and then Add to Watch List. From the Scan tab, right-click a security and then Add to Watch List. And that's how you make a watch list. For more demos on how to think or swim, head to the Education Center on tdameritrade.com.
Welcome back to Your First Trade. I'm Scott Connor. Now it's time for the wrap on this Monday, April 4th. Well, all four of the major indices ended up to kick off the week. Remember, we're coming off of 3 weeks of gains in the S&P 500 and the NASDAQ. So this was sort of an important point to kick this week off to see if the markets could maintain those gains. Now, keep in mind that the markets did show gains in all four of the underlying indices, but our advanced declines were a little bit weak. So the breadth might have been a little bit behind. As a matter of fact, the S&P 500, we had 250 stocks up on the day and about 250 down on the day. But you can see we had good gains across the board from 0.3 all the way up to 2% for the NASDAQ. Now, let's keep our eye on a couple of the commodities we've been watching that are influencing inflation. And of course, one of those is oil. It was up $4.42 today, up to 103.6. So definitely saw some strength in oil today. Again, might regenerate, if you will, some inflation concerns. At the same time, we saw RB, which is gasoline futures. Those were up as well, up to $3.21 a gallon. That's almost a 2% move to the upside on the day. And finally, gold gaining a little bit more strength today, up about $13 to the 1936 level. So those commodities we keep watching. Now, what about the yield, the 10-year yield, symbol TNX? Well, that finished the day at 2.41%. And again, small move there, if you will, up about 1%, a little bit over 1% on the day. But it looks like interest rates are creeping a little bit higher. Now, let's also look at Bitcoin. And this is something a lot of our followers have been keeping an eye on. Got up as high as 48,500 recently. It looks like it might be turning over a little bit, down slightly today, closing at 46,405, right at that level. Okay, what about VIX? Well, that's the fear index. That measures how much uncertainty there is in the market. That was actually down today. Again, no big surprise there with all four indices being up. It was down to 18.57. The VIX down, it looks like a little over 5% on the day. So that's one of the new lows that we've seen since the beginning of the year. Now, what about stocks? Stocks that were on the move and of course, indices. Let's start off. Well, the strength today was in the FANG stocks. A lot of those big names showed gains today. As a matter of fact, keep in mind that of the different sectors, 11 of them, I believe 8 of them were down on the day, but a lot of good strength with the FANG names. You can see some of those names there. Facebook up 4%, Netflix up 4.8%, Apple up 2.3%. Look at Amazon up almost 3%. And finally, Tesla 5.6% to the upside. So good strength there. Now, where do we see perhaps a little bit of weakness? Well, again, that was the healthcare sector. There, and several were down, but healthcare is a good example. You can see HCA, United Healthcare, all of these stocks down between 0.5 and almost 4% on the day. Now, what about some individual stocks in the news? Some of the big names. Well, we mentioned Twitter a minute ago. Elon Musk taking a 9.2% stake in Twitter. That stock moved to the upside, up over $10 a share. That's a 27% gain on the day. Big move on some big news with Twitter. On the other hand, what about Starbucks? Well, the CEO of Starbucks decided to forego the stock buyback. Stockholders weren't too happy with that. Stock down $3.40, down about 3.75% on the day. So some weakness there. Now, as far as economic data, we only had one number today. That was factory orders for February. That came in pretty much as expected, down about 0.5%. and that's exactly where that number came in. Now keep in mind, this week we'll have the FOMC minutes on Wednesday, and several Fed speakers throughout the week. All right, well, that's going to do it for the wrap here on April 4th. Don't forget, we're back tomorrow at 4:30 Eastern Time. We look forward to seeing you then.
side note, that Twitter buy is pretty spectacular. So that's going to, but also, this is a company that has completely changed how the automotive industry is looking right now. And you've got a lot of other, Me Too type companies popping up, these other EV companies, and they're all way behind, but they're getting a lot of buzz. So Tesla's leading the pack. They're doing better than all of the traditional automakers with our data. They're a little bit behind as far as increase in purchase intent as some of their competitors, but it's also really, really small numbers. I mean, if you're talking about like a company like Rivian, they're at, they're at plus, I think, 180% year over year purchase intent change, but they've delivered 900 cars, right? Tesla's delivering about 3,500 a day right now. So they're still leading the pack on that, doing very well, as you can see, against all the traditional automakers, and their happiness is also very strong. So better happiness than most of the traditional automakers, and a little bit behind some of the EV ones. But again, they've, Lucid's delivered 300 cars so far, Rivian's 900, and the other one, Fisker, hasn't delivered one yet. So they're not really part of the conversation just yet, but it is something to watch out as they come up. The concern, though, with Tesla is they have a 230 PE ratio right now. They're only about 9% off all-time highs. The stock is doing very, very well. They've struggled a little bit with chip shortages, mostly supply chain issues coming from that as well. So they've got some problems on delivery, but their pace is continuing to increase. Now, if you look at how their purchase intent has gone over the last few quarters, the problem with Tesla is that it's slowing down. Their growth is slowing down, and that's what we like to look at Likefolio is how has it changed. So if you look at how it was just a little while ago, we were looking at plus 52% year over year. That's from 2 years ago to last year. And now, even though we're at all-time highs on purchase intent on a quarterly basis, that pace is only plus 3% year over year. So it's slowing down a little bit, and no investor wants to see that. Even though you're at all-time high purchase intent, extremely high happiness, everybody loves the car, it's fantastic. The growth slowing down is tough because we talk about this on the show. If you've got a PE ratio in the 200s, 230, I think right now, anything that's showing any kind of slowdown is going to multiply on the downside, just as acceleration will multiply on the upside. So you're really getting stretched out a lot, and that's a little bit concerning to me. So they report in about 2 weeks, Likefolio data, and I personally love this company long term, but I'm not buying any shares until after they report. I think maybe Wall Street could be in for a little bit of a disappointment just based off of, again, the growth. Even though it's at all-time highs, the derivative of that is slowing down. And I don't think anybody wants to see that.
Landon, Wedbush is out this morning with a $1,400 price target and some interesting stats on pushing out some of their production capacity just because of all the slowdowns in China due to lockdowns and from Q1 to Q2. And, so I think some pretty, technical analysts look at what's going on there. But how do you consider, when you look at that purchase intent, how do you consider this industry, I guess? Maybe it's not the most unique, but it feels like it, where some of these companies, to your point, have literally never produced a product, right? Versus Tesla, which has relatively high market saturation or penetration, I guess is the right way to say it. How do you factor in the penetration of their sales and their growing sales into that purchase intent? How do you factor for the idea that so many people have bought a Tesla relative to their competitors?
Sure. So, if you go back to a few years and Tesla, if you looked at the purchase intent chart of Tesla, it was screaming off the charts. Now, relative to today, it's extremely low. But back then, before they delivered cars, it was very high. So we were bullish on Tesla, back in 2016, 2017, because those bars, if you compare them to the previous bars, are really high. They're small compared to the ones now, but it was big growth. And so I think a lot of people maybe dismissed that and didn't understand what the demand really was. People really were looking forward to these cars, and everyone sort of wrote them off. That's why you've got these perma bears on Tesla just continually getting crushed because they didn't understand how important consumer demand is. So if you look at Rivian, for example, that plus 184 purchase intent year over year, that is what I would say a little bit concerning. They haven't delivered many cars, 920 so far. So they haven't delivered many, but Tesla was in that same boat 4 or 5 years ago, 6 years ago. So they're coming up. We'll see how they do compared to Tesla. Tesla's by far the leader. They've got the most penetration, absolutely. If you've ever ridden in one, you're sold. I mean, they're unbelievable cars. But you got these other guys that are up and comers, and of course all the traditional automakers are converting, getting a lot of electric vehicles out there. A lot of it has to do with gas prices. I mean, people talking about gas price concerns, that's plus 400% year over year. And also the autonomous vehicles, the automatic driving, that is huge. So that's plus 80% year over year. So people really want these features. They want to get off gasoline. They want to get the safety features and the ability to drive autonomously. Tesla's leading the pack, but they've got 3 companies that are coming after them. We'll see. I think Lucid is really falling behind, but the other 2 are making their claim that, hey, we might be able to get there as well. We might be able to compete with Tesla one day. We'll see. So I wouldn't write them off. We're going to need to see serious deliveries, serious follow through from them over the next few years before it's a real concern, but they're on the map of concern right now.
Landon, in terms of deliveries, the Model S and Model X, they delivered 14,724 cars. That's actually up 25%. But the Model 3 and the Model Y was 295,324 cars, but that was actually down slightly, Landon. Are you seeing any problems in that perspective? Like their growth is coming from the S and the X and actually not from the biggest seller. Is that any kind of a red flag at Lightfolio?
Yeah, so the models breakdown is really important. The Model 3 makes up almost all of their sales. I mean, it is a huge, huge percentage of their sales. You can see the Model Y is the fastest growing when it comes to people talking about which brand they're talking about or which model. But the Model 3 is second, and we're seeing some growth through that. The X and the S are actually, we're seeing them kind of less relevant as well as the Cybertruck, which has not been released yet. So, anytime you have a car that the high models are 60, 70, 80,000, maybe 120,000. And then you've got this much more attainable Model 3 that's in the, 30,000 or something like that. It's going to lead the pack. But I also think that you get that in front of people, it could be a stepping stone into something larger. But of course, the more affordable car is going to be the one that's leading the pack. But that is the one to watch because it makes up all of their sales. So the fact that it is a little bit slowing down, the growth is slowing down, that's a big concern. But I don't know that it's from demand as much as it is from a lot of chip shortages and supply chain issues. I mean, this is a very chip-heavy car. All cars are now, but these are some of the most heavy when it comes to chips. So I'd say that's a big concern. The purchase intent is a little bit of a scary issue. Again, it's plus 3% year over year. It's better than it was, but it used to be plus 50% year over year. So anytime you get that situation, you're setting yourself up for a little bit of a disappointment when you've got a PE ratio as high as they do and expectations as high as investors have for this company.
Yeah, if you are one of the world-class growth stocks and the energy is for growth, you need to continue to show growth for that energy to remain. And you're right. The China factory is currently on pause now because of what's going on with COVID. There are supply chain shortages. There are other issues with some of the cars, yet they were still able to put up relatively good numbers. I think they missed the expectations by about 7,000. I think Wall Street analysts wanted 317. It came in right around 310. But they've got, it's funny, Elon Musk put on Twitter this morning, Berlin rocks, right? Which means Berlin is getting ready to go. They've got Texas, Austin ready to go, Shanghai, Fremont. So this company is still, expanding its footprint and getting ready. Landon, give us your final thoughts on Tesla in terms of the problems they have and the opportunities they have. And of course, Elon Musk.
Sure. So I think that's really the story is you don't bet against Elon Musk. You can ask a lot of broke perma bears who've been short, that forever. It's just been getting murdered on Tesla short. You just can't bet against the guy. He's one of the greatest entrepreneurs and innovators of our time, of all time, really. And the company is now, it used to be, they'll never be able to build that. They built it. They'll never be able to deliver it. They're delivering it. So long term, I'm a huge fan of this company. I think I'm going to tap the brakes a little bit and pause until after they report, because I think there's a chance that they could come back a little bit on the report based on slowed down growth. But then I'm jumping back in on any kind of dip. Just looking at the deliveries, they're at a pace of about 3,500 a day, over 1 million. And if you look at GM and BMW, they did about 2 million, Ford's around 4 million. So Tesla is a major player. They used to be written off as you'll never be able to deliver these cars. And just as you mentioned, they're ramping up production. They are going to be, over the next 5 or 10 years, the car company. So long-term, super bullish, never bet against the guy. Short-term, I'm going to wait till after they report.
Landon Swan, co-founder of Likefolio.com. Thank you so much for coming on, as always, bringing the Likefolio data to Fast Market. Have a great day, Landon.
Thanks, guys.
All right, Nick. You've got a trade here up on Tesla. It's something similar to what Landon was discussing, right? It's talking about a pause. It's talking about the run it's been on. Give us your ideas and the trade you brought for Tesla. It's something in the Iron Condor family, isn't it?
Like, this is less about, I think anybody that's seen the show before knows that we talk Iron Condors, and there's lots of ways to kind of go about this. This is a very neutral trade, though, for Tesla, which I think what Landon said, and certainly not making recommendations on stocks here, but I think, when they do have a pullback, the rally that has ensued every time, and history doesn't repeat itself necessarily, right? But to his point on just people getting short the stock, getting short the stock via options, and just getting run over because it rallies back so quickly is a dangerous premise. So if you're going to take a short position, right, you want to make sure, as always, you're defining your risk, because it reverses and reverts very quickly. So, and look at a chart now, right? I mean, you see this just parabolic line. You almost can't get your chart narrow enough to not see it looking straight up. And there hasn't been like massive news, right? They're bringing on factories around the world, bringing online factories around the world. And even when we hear about supply issues and halting of what is potentially their biggest growth market, the stock's up, pretty significantly today. So that's not a bull case necessarily, right? Anything can always happen with these companies, but I think if you do feel like this move in its current state is a bit outdone, you may be thinking, right, as an example trade, that this thing takes a bit of a breath prior to earnings, which is coming up in a couple of weeks. There's still an estimated date out there between the 25th and the 27th that I'm seeing. So I don't checked a few sources and see a couple of different dates. So the earnings date isn't even necessarily locked in yet. And then he's out there doing all kinds of other stuff, right? I'm always wondering what happened to the car that he shot off to Mars is doing right now. He's buying almost a control share of Twitter, and obviously all the solar stuff. So there's a lot of irons in the fire for Elon, as always. So this is just a simple, maybe the stock takes a bit of a pause. It's rallied so much, isn't calling for a huge pullback, but is also not calling for this trajectory to continue into earnings, which is about 2 weeks out. So I was just looking, Kev, at selling, an even call spread and a put spread, 10 points wide, the 1200, 1210 call against the 10 half or 1050 put, 1060 put spread. And, it's $10 wide. You're taking in about, $2.80, $3. It's kind of right in that sweet spot of, collecting 25 to 30% of the strikes, of the width of the spread. And you're looking for just a bit of a consolidation here over the course of the week. This is a short-term trade. It doesn't really call for a correction of any kind. It's just calling for, hey, maybe this move, given the velocity it's seen, consolidates a bit over the next 4 days. If it stays within that range between your short strikes, you get your 1200 and your 1050s. Your 1060s, which is a really wide range. Yeah. This thing would achieve maximum profit, and then obviously if you go outside of that, you've got your maximum loss, which is about 70 cents on the dollar.
Yeah, interesting footnote on this trade, Nick. Number one, it's this week, right? So it's only this week, and you've got about $1,400 between your short strikes. So that's $700 on the upside, $700 on the downside. So you've given yourself quite the room for this to trade in. And like you said, Likefolio's data is a little counter. than to the rally that you're seeing in this name. Some of the growth is slowing, not stopping, but slowing. But again, you fade Tesla at your own peril. But a great idea for a trade, Nick. We'll put that on. We'll check it during the week. And that is the end of our second segment of the day, but we got more. The whole second half of this show is about Elon Musk. So let's take a quick break, come back with our discussion between Nick and I on Twitter and Elon Musk's trade that he's made over the last couple of days. Pretty interesting. Take a quick 2-minute break, come back with more Fast Market. See you then, everybody.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
Trading isn't just a hobby, it's your future. So you don't lose sight of the big picture, even when you're focused on what's happening right now. And Thinkorswim is right there with you to help you become a smarter investor. With an innovative trading platform full of customizable tools, dedicated trade desk pros, and a passionate trader community sharing strategies right on the platform. Because we take trading as seriously as you do. Thinkorswim by TD Ameritrade.
Before diving into the markets, prepare for the trading day with the Market Minute newsletter. Videos, market insight, and more delivered right to your inbox. Go to tdameritradenetwork.com, click on the pop-up to subscribe now.
Binge watch the market with TD Ameritrade Network.
The dollar, interesting activity.
So now I did some deep research into this.
People are out of the house and engaging with the U.S. economy.
Tune in 24 hours a day, 7 days a week on tdameritradenetwork.com and all your favorite streaming services.
You can also take us on the go with our CarPlay-enabled iOS app and our audio-only podcasts. TD Ameritrade Network, available anytime, anywhere, on any device.
Ben Lichtenstein here with your TD Ameritrade Network Futures Market Update. A sharp move higher to begin the week in the NASDAQ, led by Pinduoduo, Alibaba, and JD.com. Tech is leading today, up over 1.5%, and futures are back above 15,000. It's pedal to the metal in Tesla. It's cruising up over 4% this morning after reporting record-breaking first quarter deliveries of about 310,000 vehicles. And Twitter is spiking on news that Elon Musk took a 9% stake in the company. It's up over 25%. Now, the move up adds to the NASDAQ's rally off the March lows, where futures bottomed out around 13,000. It puts the tech-heavy index to just shy of the 200-day moving average. Crude oil this morning, WTI is back above $100 a barrel after posting its worst weekly performance since April of 2020. Last week, the U.S. announced plans to release 180 million barrels from strategic petroleum reserves over the next 6 months. The IEA said the IEA states are in agreement on a coordinated oil release. They still have yet to determine volumes, and OPEC Plus is increasing production quotas, all contributing to the decline in prices. The Brent last week to 103. Back around 108 this morning, as many feel the relief from the added supplies could be short-lived as demand remains strong, even with over 30 million Shanghai residents in lockdown. WTI futures are trading just under 102. They're up around 2.5%. This has been your TD Ameritrade Network Futures Market Update, and now back to Fast Market.
Welcome back to Fast Market, everyone. Kevin Hinks and Nick Theodorakis back here for our third and final segment of the day. And let's get now to the fun part of the show, Nick, where we talk about Elon Musk and his new relationship with social media. Now, Elon Musk has 80 million Twitter followers. And as you know, he's quite active on social media, but he's never been this active, Nick. He now bought 73.5 million shares in a 13G filing with the SEC. He paid about $2.9 billion for 73.5 million shares. It's worth a little more than that now, Nick, as the stock is up 28.4%. And by the way, extending gains as the day goes on. So people believe in what Elon Musk is doing, but like I said, he tweeted this morning that Berlin rocks. He tweeted yesterday that he's inspired by curiosity, and he is consistent on social media, Nick. But now, Nick, he's got a 9.2% stake in Twitter. He's now considered to be a passive investor. I don't think he's very passive, Nick.
I started following Twitter, Kevin, when it was, I don't know, $30, right? And I always just thought it was a $30 stock. It was, it's been 30, like,
yep.
I don't know what the exact, moving average, the lifetime moving average of the stock is, but it's hung around $30 to $40 forever. And all of a sudden, it's 50 now. So, I still question, like, in its current state, what is the monetization plan for Twitter, right? All this aside, what is the monetization plan? What happened today that makes it worth 25% more? That's a lot of percents. What makes it worth 25% more than it was yesterday? It's just a fascinating, I got a big smile on my face. It's just a fascinating tale of him, Elon Musk, driving, investment decisions, him driving, all of these kind of Reddit feed, all this stuff. Right? Look at the volume on Twitter today. It's literally off the volume chart when you pull up a volume chart along with the price action. Amazing. So he drives so much engagement in the markets and so many different products. I think it's just absolutely fascinating to see. Is it surprising? Well, I mean, clearly it's surprising to the stock. But don't forget, in the last few weeks, he's been talking about starting his own social media platform. Mm-hmm. And I think that, being smart like, he is, right? Getting penetration into a space where there's already a saturation of players. When you look at Twitter and Facebook and Snapchat and WhatsApp, all the, it's probably hard to take from another pie and add to your own, or create an entirely new pie and grow from there. But thinking about the following he already has, this is probably in his mind, and I obviously don't know, a cheap way to get, kind of vertical, if you will, integration into what he's already doing. He's got, of the most followers in the world. He's already incredibly influential. Now, when he tweets, right, he's got even more of a dollar value stake in that. And theoretically, right, going on into things like, politics and, elections coming up, he's going to have a bigger say, right? He's got 4 times the number of shares now, like in an instant almost, than the founder, Jack Dorsey, does, right? So there's just there's eye-popping numbers all over the place here, but I feel almost like it's a vertical integration for him to getting control of where he's already got all of his followers. So fascinating move.
Yeah, I mean, let's face it. Elon Musk has been calling for unencumbered free speech, which has really not been the way Twitter has conducted business lately. So I think this is going to get really interesting. And does he make a play for the entire company? It's kind of interesting to figure out what his next move is. Obviously, it's put an energize not only into Twitter stock, but all social media. Facebook is up $8 today based on this. So all the social media stocks are kind of surging as now these stocks were dead in the water and had no energy, and now they're all surging today. It's pretty interesting how he puts energy into a different sector. But the trade that I looked at, Nick, and this is kind of something we do a lot on this, but this is a different take on it. You've seen this show where we've done calendar spreads financed by short put verticals. And obviously, when I talk about this, my posture here is bullish overall in Tesla. But I did a diagonal spread financed by put verticals. So what I did, I went out to the May 6th, giving ourselves a little time. We're not going to get this by a credit because 2 things. Because it's a diagonal, and we've gone out all the way a month in terms of our days out to May 6th. So I did the May 6th 50, and then this week's April 55, which is right in line with the expected move. That's the diagonal. And then I sold two 45, 41 put verticals against it. That chips away at the net debit, doesn't eliminate it because it's a diagonal and it's a long dated diagonal, Nick. But this is costing about $3. It's taking in about $44 a day in terms of theta, and you don't need a sharp move towards the $55 stock. Nick, I've got about 30 seconds. Give us your last take on Tesla, on this trade in Twitter as we wrap up the show here.
Well, it's a nice way to help finance that, Kev, because it's about $550 for that diagonal on its own. So paying for that, right? Paying for all that time, over 30 days of time with those short-term puts, definitely reduces the cost and makes it more palatable. I think overall, right there, he's got his hands in so many things. Keep an eye on the share percentage that he owns. He's below that 10% control person ownership stake. If you see that number tick up, that could change the game dramatically.
For all of us here at the TD Ameritrade Network, have a great day and a great afternoon. Next Gen Investing is coming up next. See you tomorrow, everybody.
It's a 13-hour flight. That's not a weekend trip.
15 minutes to wait.
Wow, I'm gonna take off.
Now, you downloaded the TD Ameritrade mobile app so you can quickly check the markets?
Yeah, actually, I'm taking one last look at my dashboard before we board.
Excellent. And you have Thinkorswim mobile?
So I can finish analyzing the risk on this position.
You two are all set. Have a great flight.
Hey, thanks.
We'll see you. They're getting so smart.
Choose the app that fits your investing style.